Gold hit all-time high above $3,400. The US dollar crashed to a 3-year low in a world sea of blood. But not Bitcoin. Bitcoin rose, acting more like gold than tech stocks. Bitcoin is now moving sideways between 86k and 88k. Short positions were liquidated, which added upward pressure. The key move came on April 22nd at 9:15 UTC. Whales aren't preparing to sell. They are preparing to ride the next leg up. Whales are accumulating, not distributing. In 2020, gold rose 15%. Bitcoin, it went up 690%. Some analysts believe it's flashing a 400% Bitcoin pump signal. When fear is high and confidence low, smart money steps in. 88k and still pumping. Hey everyone, welcome back to the channel. Bitcoin just broke through 88k. The market's going wild and people are confused. Is this the top? Or is this the start of something insane? The answer? Crystal clear. This isn't the peak, this is just the trailer. Bitcoin is leading the markets, hitting its highest level since March. But isn't it strange? When everyone else is scared and Bitcoin is smiling, that means something different. And today, we are digging into exactly what that difference is. Why is Bitcoin pumping while everything else is crashing? Why is 91k the next major level to watch? And why this isn't just another pump, but something much bigger. Plus, some analysts are saying Bitcoin could quadruple from there. Sounds crazy? Let's look at the data. Gold, the dollar, the Fed, even Trump, all the pieces are pointing in one direction. Don't miss it. This is the kind of moment your grandkids might ask you about someday, and we are right in the middle of it. Let's dive in. In the last week alone, gold hit all-time high above $3,400. The US dollar crashed to a 3-year low, as we saw in yesterday's video. And, I should have mentioned this first, Trump, frustrated that Fed Chair Jerome Powell hasn't cut rates or intervened, publicly called him, quote, a major loser and Mr. Too Late, end quote. Still calling for his urgent resignation. Also, China is back in the headlines, issuing a warning that they will fight back against the US and any country that sides with them. That's putting trade war fears back on the table. Investors are getting nervous and the markets are reacting. Expectedly, US stocks dropped hard on these headlines. The Dow, Nasdaq and Standard & Poor's all fell about 2.5%. A very busy week indeed. The panic hit across traditional markets. You can see the Magnificent 7 taking a hit. Nvidia down almost 5%, Apple off 2.75%, Meta dropped 3.5%. In a world sea of blood. But not Bitcoin. And that's the twist. In fact, Bitcoin rose, acting more like gold than tech stocks. Some are calling it the beginning of Bitcoin's decoupling, where it breaks away from stocks and starts behaving like macro insurance. So, without further ado, let's dive in. So here we are, Bitcoin is now moving sideways between 86k and 88k. Then Bitcoin spiked up toward 89k, touching a thick yellow-greenish band, the liquidation cluster, just below this level. This area, between 88k and 89k, acted as a strong resistance, with many short liquidations stacked there. As soon as the price hit that zone, short positions were liquidated, which added upward pressure. But there wasn't enough follow-through to clear it completely, and the price was rejected. Following the rejection at 89k, Bitcoin dropped sharply, bottoming out around 86k by 10:30 UTC. At this level, the heat map showed another concentration of liquidation activity, this time below price, indicating long liquidations. That zone attracted strong buy-side interest, establishing 86.5k as a key short-term support level. The key move came on April 22nd at 9:15 UTC, when Bitcoin spiked sharply from around 87.5k to above 88.5k, breaking through the previous short liquidation zone between 88.5k and 89k. This move was significant because it cleared through the same resistance that previously triggered rejection. It showed strong follow-through and buyer interests. Price held above 88k after the breakouts, indicating sustained strength. As of 1 p.m. UTC on April 22nd, Bitcoin is consolidating between 88.3k and 88.6k. Support is now at 87.5k, where the higher low was formed. Resistance remains between 88.8k and 89k. The next key upside target is 91.3k, 91.5k, which aligns with short-term holder realized price. And behind the scenes, whales are sitting tight. This chart from CryptoQuant shows that long-term holders are barely moving their coins to exchanges. Inflows are at just 1.1%, one of the lowest in years. Compare that to the last time Bitcoin was near a major top. We saw 5.6% inflow at $50k and 3.8% at 97k. So what does that tell us? Whales aren't preparing to sell, they are preparing to ride the next leg up. Looking at the latest fire map, we can clearly see how whales are setting the stage. Oh, quick disclaimer there. The Bitcoin price at the time of the recording was 88k, as I said in the title, not 87.351 as shown on the fire map. Back to story. Thick layers of resting by orders below 82k show where big buyers are waiting. At the same time, the cumulative volume delta just flipped bullish again, meaning market buyers are back in control after absorbing a short-term dip. This aligns perfectly with what we have seen on-chain. Whale wallets are growing and long-term holders aren't selling. The message? Whales are accumulating, not distributing. And this price structure shows they are building a base for the next leg up. Even MicroStrategy. You didn't see that coming. They just bought another 6,556 Bitcoin, worth over $500 million. And here's the wild part. They now hold over 500,000 Bitcoin, more than many countries' central banks. Joke apart, it's been almost 1 week they didn't buy anything. Now, let's talk about gold, because this might be the biggest clue. Gold and Bitcoin have been moving together lately. But historically, when gold goes up, Bitcoin follows and multiplies it. Example, in 2020, gold rose 15%. Bitcoin, it went up 690%. That's a times 44 multiple. So, now that gold is breaking out, some analysts believe it's flashing a 400% Bitcoin pump signal. Could it happen again? Well, we are 12 months past the last Bitcoin halving. And guess what? In previous cycles, in 2012, Bitcoin rose 8,698% after the 12-month mark. In 2016, 2,515%. In 2020, 644%. We are in that exact window right now, if history repeats. So, why isn't everyone bullish? Because the crypto fear and greed index is still sitting in the fear zone around 39. That means most people are still hesitant. But this is often where the biggest moves happen. When fear is high and confidence low, smart money steps in. Historically, that's when Bitcoin has made its biggest runs. Here's what we are watching. If Bitcoin holds above 85.5k, that's your bullish trigger zone. If we break 88k again, look for a run to 91k, 92k. If we clear that, new all-time highs could be right around the corner. The biggest risk? A pullback below 82k, but as long as bulls defend that zone, the long thesis stays intact. Alright, let's wrap this up. Bitcoin isn't just rising, it's positioning. And the sharpest capital? It's already moving. Right now, stocks are shaky, gold is surging, and Bitcoin is quietly carving out its place. This is not random. This is the calm before the storm, the moment the market holds its breath before a big wave. Inflation is cooling, the dollar is weakening, and people, they're still afraid. But here's the thing, the strongest rallies in history have always started in fear. This isn't just a chart. This is about whether you can spot a once-in-a-decade opportunity. So, the real question is, are you ready? Bitcoin doesn't move slowly. When it moves hard. And if this is the beginning of a 400% rally, you will want to be the one who says, I saw it coming. Thanks for watching. If this video helped you, be sure to like, subscribe and share. Let me know in the comments. Are we headed for a clean breakout to 100k? Or do you think we will get one more shakeout first? That's it for today. Stay cool, trust the data, and chase the opportunity with fire. And as always, stay sharp, stay informed, and I will catch you in the next one. Bye bye.